Let me ask you something right now. How much money is sitting in your savings bank account? 50,000? 1 lakh? 3 lakhs? Now here's the shocking truth. If you are keeping more than 1 lakh in your bank account for a long time, you are quietly losing money. Not because someone is stealing it, not because of fraud, but because of something much more dangerous. Inflation. And in this video, I'm going to explain why keeping too much money in the bank is a big mistake, how inflation silently eats your savings, how rich people think differently, and exactly what you should do instead. And I promise, by the end of this video, you will never look at your bank balance the same way again. The biggest financial myth. From childhood, we are taught, put your money in the bank, it is safe. And yes, banks are safe from theft, but here's what nobody explains. Safe does not mean growing. Let's say your bank gives you 3% interest. Sounds good, right? But what if inflation is 6%? That means prices are increasing at 6% every year. So if your money grows at 3%, but prices grow at 6%, you are actually going backward. Your money looks bigger, but its purchasing power becomes smaller. And that is the silent killer of savings. Most people don't lose money in stock market. They lose money by doing nothing. Let me explain with a simple example. Suppose you keep 1 lakh in your savings account. Bank gives you 3% interest. After 1 year, you get 3,000. Now you have 1 lakh 3,000 rupees. You feel happy. But last year a bike cost 1 lakh rupees. This year, because of inflation, that same bike cost 1 lakh 6,000 rupees. So even though your bank balance increased, your buying power decreased. You can't even buy the same bike anymore. And this is happening every single year. Slowly, silently, without you noticing. Why banks are not designed to make you rich? Understand this clearly. Banks are not investment machines. They are transaction machines. Their job is to keep your money safe, help you transfer money, provide loans. That's it. They are not built to multiply your wealth. In fact, banks use your money to give loans at higher interest rate. They might give you 3%, but they lend that same money at 9% or 12%. So who is really making money? The bank, not you. Now let's talk about mindset. Middle class mindset says, save as much as possible. Rich mindset says, invest as much as possible. Rich people do not keep lakhs sitting idle in a savings account. They keep only emergency money there. The rest, they invest in index fund, mutual funds, businesses, real estate, assets that grow over time. Why? Because they understand one simple rule. Money should work for you, not sleep. If money is sleeping, inflation is eating it. So how much should you keep in bank? Now listen carefully. I'm not saying remove all money from bank. That would be foolish. You need emergency fund. Rule of thumb. Keep 3 to 6 months of expenses in bank. If your monthly expenses is 20,000, keep 60,000 rupees to 1,20,000 rupees maximum. That's your safety cushion. Medical emergency, job loss, urgent travel, unexpected repairs. That money should stay liquid. But anything above that should not sit idle for years. That money should grow. If you are a beginner, don't complicate things. Start simple. Option 1. Index funds. They track the market, low cost, long-term growth. Option 2. Large cap mutual funds. Stable companies, lower risk compared to small stocks. Option number 3. SIP. Invest monthly automatically. Historically, stock markets in India have given around 10 to 12% average returns over long periods. Is it guaranteed? No. Is it short term safe? No. But long term, much better than 3% savings account. And remember, investing is not gambling, it is patience. Important warning: if you need money within 6 months, do not invest that money in the stock market. Keep it in the bank. Emergency money and investment money must be separate. If you mix them, you will panic during market fall, and panic leads to losses. Discipline is more important than return. Let me end with this. Keeping too much money in the bank feels safe, but sometimes too much safety becomes silent loss. Money should not just sit, it should grow. Today, after watching this video, open your banking app, check your balance. Ask yourself, is this money working for me or sleeping? Because 10 years from now, the decision you make today will matter. Start small, start smart, and let your money work harder than you do.